And there we go. And welcome to anyone watching this early on. Um, Tonight we are going to have a special interview with one of the old experts from the MD, one of the regulars in the SCC Lounge. And as my wingman, which is now the universal wingman, is of course Dirk McGurk. So welcome to anyone that's listening, and welcome and thanks for coming, Hex.
Thanks. Great to be here.
Could you give us the lowdown on how you started playing Eve and what you were doing in the early days and how you got into the MD and all your stuff?
Yeah. So I don't even know anymore how familiar people are with that history. I think they recognize some of the big names, but so I started playing Eve back was it 2005 2006, and I didn't do anything particularly interesting in the beginning. I muddled around with some corps. I got to know the mechanics. I did some. I was a CEO of a corp that eventually got to nullsec. Regular, boring, uninteresting things. And then one day I stumbled on market discussions, and I started getting some ideas. I saw what was possible. I began to imagine, and I started to get involved and write articles and stuff like that. And I believe that's pretty much how it started, and just went downhill from there. So some of my
Downhill.
articles, yeah, downhill, uphill in some parts. It was a roller coaster of emotions, basically. But what I got involved with was this idea of markets and financial instruments. And by the way, yell at me if I start getting super boring. But
No,
um,
I'd like to ask before you go on that. Did
yeah.
you have a background in that at all?
So, short answer, not formally. But the longer answer is it's always been an interest of mine, and not just a casual interest. I have brokerage accounts. I have an IRA, Roth IRA. I've got retirement accounts. Obviously, I have a international foreign exchange account where I can trade currencies. By the way, you have to apply for all this and like demonstrate you know what you're talking about before they just hand you these things, because there's a lot of risk involved, especially when you start writing your own options contracts, which I do from time to time. So, by the way, don't ever do that. Like all the things that I do, don't ever do these things. Statistically speaking, and there's lots of science to back this up, 9 out of 10 people will not be successful using any strategy that involves that kind of complexity. Your best bet is to just go into an index fund run by Vanguard and have a low, cost in terms of the management of the fund, and just take advantage of that annualized average return of 9% for 25 years. Don't touch your money, and you're golden. And you'll beat 90% of the mutual funds out there. You'll destroy them. So don't do that. But I have hobbies. That was one of them. I wanted to actually do it. I wanted to know what it was, to understand it. So that's why I did it. It was a learning experience more than anything else. It wasn't a get rich quick scheme, right? But as I got into that deeper and deeper and deeper, and I learned more, I began to see parallels with Eve. And I went back and I studied the genesis. What was the beginning of the stock market? What was the beginning of the bond market? Why do we have banks? Where did they come from? Why do we have them? How did they first appear? What was their first form when they first got started? And once I understood the basic principles and the very, what they were in the beginning, right? Not what they are now, which is hugely complex, but what they were in the beginning, I began to figure out, well, wait a second, if I could make a minor adjustment here and there, I could basically do this in Eve. And that's when I started getting into trouble. So,
Recreating the financial world in a place that had no boundaries, yeah, you can get into a little bit of
yeah,
trouble there.
And with
that
no
that was
criminal
that was the
repercussions.
fascinating bit. Everyone was always really interested in, how do you do this, right? Because it doesn't look like, and you guys know this, what you create in Eve. Well, it looks like what you might know in the modern real world, right? It's not. There are significant differences. And while I created the things that I created based in the original idea, The original idea and what we have now is very different, right? If you trace it back to the original idea, though, the original thought, the original plan that people had, what we created in Eve and the stuff that I influenced, there was a lot of similarities. I mean, they were kind of, it's like you take an original idea that's really good and you split it in two different directions. One is the real world and one is Eve. It's the best way I can describe it. So anyway, I don't want to get lost because there's tons of backstory and detail. What do you think I should start with? I mean, there's the consulting that I did, the IPO template.
I think of course, the third party aspect is important because we've touched upon this before, and I know that Dirk has been commenting on it. Traditionally, we only have these things regarding exchange of big things like Titans and stuff, but you really brought the third party service to financial products into Eve in a proper way. Before that, it was very primitive.
Well, I mean, it starts off with the basis of you trust no one, right? In Eve, okay, and that risk that is there is really what keeps so many of these things from ever going anywhere.
Yes, yeah. I mean, a lot of people they do something that I like to call they admire the problem. And so when you talk to certain kinds of individuals, they will invent, come up, discover, create all the reasons why something should never be done. And you keep trying to get them to figure out, okay, I understand what doesn't work. We've covered that quite well. Thank you. How do we make it work? Or how could we get close to making it work? Maybe we don't figure it out all the way. How do we get halfway there, right? And certain people will just embrace the mindset of, well, no, don't talk about that. Let's talk about the problems and why it's a complete disaster and a completely idiotic idea. I don't do that. I recognize that things can go wrong and try to figure out what they are. But I typically don't look for excuses why not to do something. I typically look for, okay, if I can't get 100% of the way there, how do I get halfway there or more than halfway? And you try to make do with what you have. And so for a lot of people, in the early days, the early days in the finance, they kept saying things like, well, how do I know that this isn't a scam? How do I know the very first IPOs, right? We're talking like, it was a while ago.
17 something, I think, right?
Yeah. And so they would always come up with these questions, right? How do I know? How do I know? How can I be sure? How can I be 100% sure? And basically I came back and I said, you won't. And you don't, and no one ever does. And the real world is exactly like that. You can talk about.
If I remember correctly, you were one of the few voices that kept trying to point this out when everyone in the threat notes in MD were trying to feature creep and ask for security and protection and CCP intervention, and it just killed every single attempt to start something ourselves. And I was very much impressed and admire you for being able to at least start something resembling a financial product market.
Yeah, and it is not perfect, as you know, as you know, pretty much everyone watching this knows. It's not perfect. It has its faults. It's had its disasters, more than one. But if you look back at history, little history lesson here. So let's step back to the real world. The very first real modern bank happened in Italy, in Florence. It was created by the Medici family. They ended up to be very, very extremely rich, but they started out as loan sharks. And their key innovation was double entry accounting, where you would have your debits and your credits and then your overall balance. It was adjusted as the credits and debits were applied. Now, this might seem like a pretty simple idea, but no one had ever done it before. So they had a book of business that they were able to understand in a way no one could before, which allowed them to scale up and become large. And they became so large, they expanded their operations to England and Spain and a few other countries. Now, what ended up happening was they made a few questionable loans to the royals in England. And one of the kings of England, and it's been a while since I read this, so I'm not going to quote the names, I'll get them wrong. He basically said, you know what? I'm not going to pay you back. I took out a huge loan. I'm not going to pay you back. It almost broke him. This probably sounds familiar. people taking out big loans, not being able to pay them back, the financial security of the bank is being threatened. This happens time and time again. You look through history, it always happens. But people don't stop making banks.
Yeah, we've
They
had a
never
few,
stop.
and the
Right.
first iterations that I remember reading about was, of course, the actual just deposits and withdrawal stuff from the
Yep.
Templars, right? Where you deposited in London and you withdrew in Jerusalem, right? So this is the interesting thing that you brought in, the fact that we were starting to discuss and try to pick apart how did all these things develop in real life, in the real history, and how
That's
could
where
we reinvent that in Eve?
Yeah, that's where I always started. What was the first thing, right? What did it look like? How did it work? What was the fundamental? If you strip everything down, you boil everything down. What are the most key core fundamental ideas? And then how can I take those same ideas and apply them to Eve within the context of the constraints of Eve, right? And so, just a little bit of background on myself personally. At the time when I was doing all this, I worked for one of the 4 largest accounting firms in the world, still is. My specialty was IT and financial controls, managing risk in systems and organizations. So I had this background in risk management and controls, right? So how do I control my risk? I can't eliminate my risk, but I can reduce my risk. What can I do to reduce my risk? And so whenever I approach these problems, I came up with an adapted model based off of a fundamental idea that was good in history. And I tried to apply a little bit of risk management and controls where I could, where it made sense, and tried to make it at the same time usable. So my master's degree is in human-computer interaction design. And so design's always been a big way it's influenced my thinking. So I came from a design background with programming knowledge of financial history, and a systems thinking approach. And that's how I tackled these problems, because they were these wonderfully complicated, difficult problems. And then, of course, you throw in people at the end of the day as well.
And what I really liked was the fact that you managed to simplify them, right? And this brings on the whole thing with, now you mentioned the history, and then of course there's the different products, and I mentioned some of them with Dirk on the other show, the currencies, the bonds, and the shares. But what I really liked was when you then introduced people to a level of professionalism that had not really been seen since Taggart left, Taggart Transdimensional and Ragnar, that was the CEO, that wanted to do some of the same things that you did, but he wanted to do them on an industrial scale and not on a financial scale. So what you brought in was these new templates and standards of practice, and it was very easy to follow, and we saw an explosion in the MD. And could you tell, how did you cut it down? Because both your business plan model and how to conduct IPOs regarding bonds especially, how did you come about doing that?
So there's a phrase I use today, and it's a phrase I used a lot back then. The easier something is to do, the more likely it is to happen. And so what I tried to do was exactly what you said. I tried to make it very easy. I tried to make it very simple. I tried to help people understand what they needed to do. At the end of the day, a lot of these people, they wanted to do it, right? But they didn't know how. They basically wanted somebody to tell them how to do it. What should I do? What are the things I need to consider? I created an outline. It was a framework. The IPO template, I think, is the one you're referring to. And I basically said, okay, well, I know how investors think, and I know, what I look for when I read financial reports on the stocks I own. I want to know things like what's the business plan? Where's it going? What's the direction? What are your risks? Are you good on cash flow, or are you, in a lot of debt? I tried to basically group these into sort of areas of concern, right? And that's how I organized the IPO template. I basically said, these are your areas of concerns. Here's a couple of specifics. I included examples for almost all of them. And I always preface things and qualify things by saying, look, you don't have to follow this verbatim. This is a starting point. You really have to consider these questions. You have to create some thoughtful responses that I think your investors are going to say, okay, yeah, this guy's actually given due consideration and done their due diligence when it comes to thinking about their business. And that was sort of the key, right? make it easy to follow, give them an outline. They don't have to follow it exactly. They could leave out entire sections, and that was all right. What ended up happening, and this is what I didn't anticipate, I made it as a tool for the people that were raising capital. I made it as a tool for those people that were seeking financing. What ended up actually happening was the investors would go and they'd grab the template and they'd look and they'd see, okay, which sections didn't they address, right? Or if they didn't follow the template, they would use, let's say, somebody trying to raise money just said, you know what, Hexxx is dumb. I'm not going to use his template. And they create their own thing, right? The investors would go to the template and they'd use it as a checklist. And I saw this happening, and it was amazing. That's what I did not anticipate was the emergent behavior of the investors, because what ended up happening it was a great little piece of education for them, right? They'd look at that and they'd say, "Oh, that is the stuff I need to think about." And so, if you looked at the questions that came after the template, a lot of them tied back to the template, you know,
and
that
that's
was
what I really liked and wanted to talk about was the whole emergent thing that you simplified the model. And it looked to me as if the players were actually expanding it and going further, because even though you left out a lot of things that you might have wanted in there, because that's what's in a more complicated and detailed business plan, and things like a SWOT analysis and stuff like that. And all these things just emerged by themselves. People started asking questions exactly like this, doing their due diligence in a proper way, and they used your template to do so. And then the other thing that you had kind of introduced, the whole third-party thing, and that then got tied into that. So you started having auditors and semi-professional auditors, and like, holy, what the? This is working.
Yeah.
Well, anytime you give anybody, kind of the baseline, right, then other people find it much easier to just add to it.
That's exactly what it was. I gave them a starting point. That's all I did. I gave people a starting point, a frame of reference, a beginning, right? You can go complicated. You can, and I sometimes I try to tell people, don't go that complicated. Stop. You're not wrong, but it's not going to be accepted. It's not going to be adopted. It's too complicated. People won't go for it. But you're exactly correct. It was a starting point, and it helped people begin to think about this stuff, and it shaped their thinking. And that was the unanticipated consequence that I absolutely, I'd probably say is one of the things I'm most proud of. The third party thing is interesting. If you look at the real world, what is the role of a third party? And the role of a third party is to provide objectivity. There's a term that we use, assurance. And what that means is, I'm speaking off the cuff loosely here, but essentially it means confidence. If I have a high level of assurance, I'm talking about high level of confidence. Introducing a third party who's objective. And I think one of the more famous ones is our friend who's
Moody's and S&P on mortgage-backed securities, like.
Exactly. It's there's a gentleman that deals with a lot of Veldspar that I think is famous for it. But the third party thing was a big concept, right? Simple ideas, right? A framework, a simple way to think about things. The idea of a third party coming in to add some objectivity and trust. Very simple, fundamental ideas, not complicated. And that's why I think it was adopted.
But then,
I just want to go back a second to when you were coming up with this stuff. There's a difference between institutional risk and consumer level risk, right? I mean, when you're trying to mitigate risk at the institutional level, it is far different than when you're trying to regulate protections for consumers. You were not trying to do that, right? I mean, you were trying to create something that because we know that we don't have a true regulatory body in Eve, for that. So you're not going to be able to get down to that level. But were you trying to create something that was for all the people, or for that kind of group of people where they could adopt some standards and norms and limit the trust to those that they were frequently working with?
It was the former, not the latter. Although I think the latter is what ended up happening. It's interesting how it evolved. But originally I was trying to create something that everyone could use. And while it was limited and it had its shortcomings, the idea was that it would be simple enough and it would work most of the time for most people. And hopefully that would be enough, right, for people to adopt and to make use of it. But I wish I could say I planned everything out and I had that level of, detail in mind. I didn't. I was basically just trying to advocate for basic, fundamental, what I thought were basic ideas.
And you kind of, because then it segues into the next part in history, right? The can of worms that you kind of opened that you did not really expect, right? Because you had very good intentions and you were being very professional, and it ended up that players kind of took it and ran with it, and it ended up in areas that were not that positive.
Yeah, so there are some specific examples I can think of, but I do want to talk a little bit about IPOs versus bonds and why they went the way they went. So in the beginning, when all this was going on, I thought at the time, and I think a lot of people had the same idea, IPOs were great, and we should all strive to be doing IPOs, and we should not be striving to do bonds. The problem then and the problem now is that what's required to do an IPO properly, it's a lot. It's tough on the people that manage the operations. It's tough on the auditors because of a lack of good tools. Right now in Eve, we don't have large scale accessible. We don't have accessible tools for calculating cost of goods sold. In accounting, there's an idea of first in, first out. Having multiple assets in multiple locations, being introduced into supply chains, manufacturing. There is no readily available, easy to use software that helps people understand this. And without that, it's very difficult to talk about profit margins. And so that's why people have and still do talk about NAV, which is a horrible indicator of the success of a business. Having assets is great, but that does not give you a good idea of cash flow or margins or trends in terms of, are your expenses rising? Are your prices rising in accordance? There's no pricing application for complex supply chains, product being created from, any number of ingredients, and then one of those jacks up in price. How do you make sure that you're pricing your stuff appropriately to maintain your profit margins? And the answer in a lot of cases is you don't, and you guess, and so you don't know, and so it's not very well managed. And how do you talk about dividends and what's appropriate for a dividend if you can't calculate your profit margins and your profits? Right. Dividends should be a fraction of your profits, and it should be some defined number that you can communicate to your shareholders and say, look, I'm going to give you 10% of my profits.
And that ties back to the whole topic of accounting and accounting tools, and the fact that most players today in Eve still only use the daily prices to calculate whether something is profitable or not, and then they basically make their estimates based on that. They don't use a proper accounting tool. They don't say, I actually bought titanium at this price, I built this item, and it had these overheads, and this is my result, this is what I sold it for, this is my profit margin, right? And of this, I'm going to pay this much back to my investors. They don't do that, or at least the majority don't, because it never really picked up. There was a few attempts to do proper shares businesses, and I know that many of them got a lot of help from you to start that up and virtualize shares and try to do it, right?
Yeah, I consulted on that a lot. I talked about accounting a lot. There's still I have written, and if people are interested, I would encourage them to go back. I've written a lot of articles about basic fundamental principles and concepts, and I've published them over the years.
Where were these published?
So they'd probably be on the old forum because it was a while ago. But I wrote exhaustive articles on how to calculate the exact method you would use to do the accounting that you would need to properly do an IPO, which could be done with software. It wouldn't take a lot. But the problem is that you still do need people to write the stuff. I don't have the time personally. I'm unfortunately way too busy, and there are any number of projects I'd love to be able to do for Eve, and accounting's just not at the top of the list right now. But it's tough, which is why we saw, and this was, I think, called out in a couple of graphs, and I'm referencing posts, and when I reference posts, guys, please take into consideration this is like 6 years ago, because it's been that long since I've been heavily involved. But there were posts back then that basically pointed out within 3 years of the template the shift from IPOs to bonds. So we saw it as early as a year or 2 years after the IPO template and the IPO rush. We saw the shift towards bonds, and it made sense. Bonds are a lot less work. It's very easy to understand what you're going to get from them, right? With an IPO, a proper IPO, the dividend, the profit sharing, the dividend, it's variable. It's not fixed. And so you've got uncertainty. You've got, you don't really know your profit margins. IPOs have so many problems. You go to bonds, though, all of a sudden you don't necessarily need a business plan, although a lot of people use the IPO template for bonds. You just need to be able to pay pay the interest on that bond, and that's it. That's really, at the end of the day, that's what's required, right?
Well, it's easier for the investor to understand what they're supposed to be getting out of it, right? You still get back into the accounting aspect of, does this group have the wherewithal to turn a profit in order to pay interest on their bonds?
Right, and really, to answer that question, they simply demonstrate it, right? They say, yeah, we're going to pay, and usually they did. With bonds, you ended up having lower interest rates, very low interest rates, still low. I looked at the market thread earlier today, and I'm still seeing pretty low rates for bonds. So it's interesting, but
it's a low rate environment. We're trying to goose the economy.
Until the accounting tools and the pricing tools are created and made readily accessible to Eve players, IPOs will continue to be the redheaded stepchildren of the financial market.
Yeah, and that's really, if you go back to what you said about the history of banking, how it was the double bookkeeping that was introduced, how all these points in history, things have been introduced that made something possible, and we still haven't had the equivalent in Eve mechanics terms, right?
Yep.
So we were forced, or you were forced, to try and invent these things, introduce them to the rest of us. We picked them up and started using them, and that was actually not as easy as we might have expected. So we started seeing a lot of things of people then starting thinking about how can they then come out on top, and then we started seeing things that resemble Ponzi's and actual planned scams, and we saw the first attempts to do banks, and they might have been really legit initially, but then they just figured out how much work this is, that you need tellers, you need all these things, you need the actual accounting, you need the transparency, and all these things that you have been telling people that they have to do, but they just skipped it. And
I told them how. So I mean, and I'll have to pull these posts, and maybe we can put them in the notes. But I literally was walking through the steps and arguing why the steps were the correct steps and why it was the right thing to do on doing the accounting and how to actually work it out through the API. I actually mapped it all out, because that's pretty easy to do, right? It's not like I had to write the actual program, the application, which takes far longer, but I could actually do the data mapping and say, here are the API records, here's the mapping from the API fields to the journal entries that you should have for your accounting. And here's how you classify your journal types, your entry types. So, and then if you can't classify them, and there were a few that you couldn't, here they are. And you just have to manually go in and classify them yourself. And then if you've done that, your accounting's all square. And you know exactly what your costs are and all that stuff. The problem is it would take a lot of work to put those tools together, and it would not be fully automated. You would still need somebody to be doing a non-trivial amount of work to make sure that that's maintained. And so, these are big hurdles. And until CCP conforms their systems such that they can be easily transformed into accounting entries, which the API entries right now, they aren't. But if CCP actually sat down and really committed and cleaned everything up so that it neatly could transform to accounting entries, that would be a huge thing. And you could actually see these tools put into place, and you might actually see IPOs come back and give bonds a run for their money. So, do we want to talk about banks?
Yeah, well, I was just going to say, and really to some extent, bonds are somewhat a simplified version of if you went to banking.
Yes. As
unsimple as bonds are.
The idea is the same. So basically, there are two forms of financing. There's equity financing and there's debt financing. Equity financing infers ownership. Debt financing, you owe somebody money, right? And so the idea behind the bank is it's basically one way to think about it is it's a line of credit, right? So a bond is I borrow money at a point in time. It's a set amount. I tell you exactly what I'm going to pay back when and when it's going to be done. And it has a beginning and it has an end, right? Banks basically say, I'm going to take your money, borrow it. I'm going to keep it safe, but why do that, Neve?
Here it comes.
Right. And I'm going to pay you interest on whatever money I'm borrowing from you at any given point in time, right? There's no end. There's a beginning when I open the bank, but there's no end unless the bank closes, of course. And so it's basically a line of credit that a entity, an organization opens and then maintains. And to the extent that they can grow the amount of money which people provide to them, they can then take that money and invest it or use it for market manipulation. So ideally, traditional banks in the real world, they use their capital, their float, right? By the way, sorry, I'm going to back up a little bit, define some things just so we make sure people understand what we're talking about. So, oh gosh, it's been so long. So the bank has deposits and the bank has withdrawals. In almost all banks, you have more deposits than you have withdrawals. In fact, withdrawals end up being a very small fraction of the overall amount of money that's been deposited in the bank. Modern banks take advantage of this fact and they lend out some amount of money of their deposits, some fraction of their deposits, such that they can then use it in capital markets, either to invest in stocks or bonds or provide home loans and mortgages, right? And they retain a fraction of that, which is then used to service withdrawals. It's called fractional reserve banking. It's the way banking's been done for more than 100 years. We basically took that exact same model and we said we will retain a fraction of, and sorry, let me finish the explanation before I dive into eBank because that's a whole thing. So with banks, they basically say, I'm going to bet that I won't need more than so much money on hand to be able to service, deposits. Because what happens when a bank can't, or withdrawals? What happens when a bank can't service its withdrawal requests? You get a run on the bank. A run on the bank. People lose confidence in the bank and begin to withdraw money in mass. And if the bank's already loaned out a lot of money for mortgages or investments, that poses a bit of a problem because they could actually run out of cash. And so a lot of governments will have some kind of insurance for banks such that it eliminates the possibility of a run on the bank. Because the government, for example, the United States government, if you're insured with the FDIC, they say that no matter who you are, they'll insure up to $200,000 balance. Right? So if you have $150,000 in the bank and the bank collapses, the government will give you whatever the amount was in your account. This prevents runs on the bank in the U.S.
And in Eve, they seem to skip that point, right? Because they forgot to get proper underwriters to securitize the capital. They forgot to actually do real work, right? They didn't do proper investments. They didn't create contained portfolios of the bank's investment that could then generate profit and become the assets that they could liquidate and pay out to any run on the bank, right? So they seem to have, again, ignored all the things that you kind of told them, and they were trying to game the system. And that's why they use things like extremely expensive BPOs and things like that to be their collaterals. And this is just not viable, because it doesn't secure, or it's not a safe bet that you're going to be able to do that. We've seen that so many times.
So there's three issues going on there, right? I'll try to break them apart because we can't talk about them together. It's too confusing. So one is the idea of the run on the bank and eve, right? There's no insurance for that. There's no government that will guarantee that if the bank collapses, you're going to get your money. So the most important thing for any bank and any organization that engages in banking, because there are many today, right? Any organization that engages in banking as a service, even if it's not itself a bank, requires absolute trust and confidence in its customers. If it loses that for any reason, the customers will begin a run on the bank, which could produce some challenges in terms of liquidity. The organization could run out of cash, and they need to make sure they have cash on hand. The reasons they might run out of cash is they might not have all the cash with one character. The cash may be spread out into different investments, sort of what you were talking about, Caleb. And so, there's a reason they need confidence. And so for the banks and Eve, historically speaking, and the services that use some banking element, confidence and trust is key, and that always has to be maintained. And that is the single greatest threat to any banking service in Eve.
Yeah, they were too small, right? They were too. The groups that were trying to run these things were very small and very sensitive to one person holding access to everything. So they forgot to spread their risk on their stakeholders. They didn't have proper shares or traded their business publicly. So they didn't have any actual stakeholders. They had the account holders, and then they had the administrators. So it was basically bound to break, right? Because it's about having to do real work, right? You have to have these assets, and if you don't have transparency, you don't have stakeholders, you don't have trust with your clients, then at some point, someone in there is going to say, I'm going to cut and run.
Yeah, well, and what ends up happening when they cut and run is the real problem. So I think
which side are you saying is the one cutting and running? The depositor that wants their funds back, or somebody within the bank who absconds?
Somebody in the bank. So one of the big threats to a bank, right? If confidence and trust is crucial to prevent runs on the bank, what do you think happens to the perception of the customer if it's found out that one of the executives or a member of the bank has stolen any amount of money? Any amount, right? Doesn't matter if it's big or small. What happens to the trust? It goes away completely, right?
Well, and it doesn't even have to be something as bad as one of the directors say stealing a load of assets, right? It could just be failed investments on behalf of the bank.
Also true, right? So anything that calls into question the ability of the bank to pay the withdrawals is a huge threat to the bank, and that produces a run on the bank. So I think we've danced around it a lot enough. We should probably talk about eBank.
Yes, we should.
Here's a base question regarding eBank. Okay, did they make loans, or were they investing in income-producing assets that weren't loans to other people?
Okay, I'm going to tell you everything, and I don't think the whole story has come out. There's a lot of stuff to it. I was a chairman of the bank. I put a lot of the directors in place. Ultimately, I was accountable for everything that happened, by the way. So, which I still feel bad about, because, it did affect people. The bank, the idea of the bank was to create a bank that actually worked, because previous banks, they just didn't. I think one of the ones that failed before eBank came around was, it was the one that Rick Dick was involved with. I can't remember the name. I think it was Interstellar or something. And then there were a couple of other banks that popped up just after eBank came into existence. When we made the bank, I designed, so my involvement in the bank was this. I vetted the idea with Charlie, who worked for CCP for a while, and now he works for a security firm in Iceland. I vetted the idea with him. We designed the corporate governance. I wrote the software. I designed the software. I wrote the software. He tested it with me. We got it working. We came up with an idea on how to produce revenue. And the ideas for revenues, we'd have 3 streams. The first would be loans, like a bank would, right? But personal loans, corporate loans, not houses. The other was going to be commodities, so titanium and the like. And then the third is the evil part, wholesale manipulation of the largest markets we could do. And I'll talk about each one of those things. I think I'll start with the manipulation first because that's kind of interesting, and I'll work my way back. But this is how the bank made money, right? We broke it up into these 3 categories. By the way, let me explain why we broke it up into those 3 categories, okay? Manipulation, commodities trading, and loans. The loans were actually the most problematic because the other 2 scale. The biggest problem with Eve and making money in Eve is that the activities aren't necessarily scalable. We needed scalable, hugely, massively scalable activities. Buying and selling minerals in JITA was actually pretty good in terms of scale, right? We could go to the major region trade hubs and we could use massive amounts of capital to make massive amounts of capital. And if we even made 6 to 7%, we just covered our obligations in terms of interest and we made profit. And that's how we did it. With the manipulation, we would buy up BPOs and certain, not big items, but small items, consumables. And we'd corner the market, and then we drive up prices. And we made as much money doing that as we made trading commodities. And then the first one that I mentioned, loans, we also made a lot of money from loans. But they ended up being a big pain in the ass, mostly because they were expensive. There was a vetting process. Directors had to approve.
Loan underwriting is pretty man-hour intensive.
It is. It is. There was collateral involved. You got to pick it up. You got to take possession. You got to return it. They were more trouble than they were worth, and ultimately were a major contributor to the downfall of eBank. In particular, we had an alliance. We liked to provide loans to corporations and alliances because an individual can walk away and a corporation can't. So an alliance, right. You can create a character and biomass them, it's not a problem. But if you've got a corporation with 3 to 4 years of history, they're not going anywhere. And so their debts are not transferable. They are not something that can be cast off easily. And the same thing goes for alliances, big old alliances. We love to loan to them. They're not going anywhere. And a lot of them cared about their image. And so all we had to do was say, look, guys, if you can't pay us, we're going to have to go public, which we almost never did. We're going to have to go public, and we're going to have to tell people that, you're not good for your word.
Could you roll back to the cornering thing? Because I think it's worth talking a little bit more in detail on how it's done and what the risks are, right? Because right now, with the market that's developing post the Citadel patch, we are seeing a lot of movement that smell a little bit like cornering.
Mm-hmm. So I can't talk about it in a great deal of detail for 2 reasons. One, it was really long ago. 2, that was actually an area that Rick Dick was the major player in. I oversaw some of it, but for the most part, that was his baby. He loved doing it. In hindsight, maybe that should have been a red flag, but We basically ended up buying a lot of BPOs that covered categories. I think I'm trying to recall what it was, and I'm sure I have the records somewhere, but um, it's actually one of the things I regret. I'll get back on topic. We had thousands of messages on our own boards between directors. The directors talked to each other constantly. We were more active than the MD. And they were constantly debating and arguing and justifying and laying out plans and running numbers. It was actually pretty impressive, more than, in some cases, the bank was less impressive than how we had gotten together these really, really smart people that were big influencers, in a lot of cases, thought leaders in the market. And we got them to talk to each other constantly. And it was amazing. So Rick Dick had all these, plans and calculations that he had for manipulation. I think if I recall correctly, it was lasers. It was laser crystals, and we just completely cornered it. Except for I think there was one guy, and he just couldn't match the production that we could. And so we were big, and we had all the BPOs, and we could move things around, and he was one guy, and so he's a very rich guy, but he couldn't compete with us. And we simply just bought his stuff and resold it because we could. We had access to that much money. The loan producers, the ones that wouldn't sell their BPOs, we just bought everything they made and resold it at a higher price, along with our stuff. So, what you can do if you got money.
And how did it go wrong?
So, there were two things that caused eBank to fail, primarily. Although I'll color that in because there are some other circumstances that led to it. But the two primary factors were this. Rick Dick was our CEO. He was also, due to legacy reasons, the main point of deposit for eBank. And so he would handle everyone who deposited money. All the money coming in would go to him. Now, early on, we established a policy which said he could have no more than, I think it was $400 to $500 million ISK on him at any given time. Or actually, no, I'm sorry, not 400 to 500 billion. He couldn't have more than 400 to 500 billion on him. And if he had more than that, he had to give it to another director. And the other directors could have no more than some amount, right? Our policy was to disperse the ISK so that if anyone got hit by a bus, we called it our get hit by a bus strategy. If anyone got hit by a bus, it wouldn't completely destroy the bank. We could continue on. We knew the math. Even if we lost hundreds of billions of dollars, we could still service our withdrawals. No problem. Because what ended up happening was people were depositing money and then just leaving Eve and never coming back. And we actually could, in perpetuity, continue the bank. We could have. We didn't. We could have continued the bank forever and not made any money at all and just processed the deposits and withdrawals, and we would have never had a problem, which is actually kind of scary. That scared the crap out of us when we realized it, because you're starting to get into some morally ambiguous territory. So Rick Dick had the most of any director in terms of ISK, and for the reasons I explained. In real life, Rick Dick lives in Australia. He's a good guy. He's a father. He's got a couple kids. And at that time, around the time when he was banned, one of his kids was born, and he had a lot of medical issues, a lot of challenges. Now, fortunately, and most importantly, the kid's okay, but he had a lot of medical debts that as a result of that. And at the time, his justification, and I believe it is true, was he stole the money so that he could pay for those medical expenses. And honestly, I have never been angry with him about that. I've got a son. I understand. There's nothing you won't do for your kid. But what he did do is he sold hundreds of billions of ISK to a Chinese gold farmer. And he ended up getting about approximately $5,500 US dollars for that. He wasn't able to sell all the ISK, so some amount of it was lost when CCP banned his character. But at the end of the day, we ended up losing something around the order of 500 to 600 billion ISK. At the time, our assets were something around 2.2 trillion. So it was a amount of money, right? We knew when he got banned that it was going to become public. The customers were going to know that he stole money, and it wasn't a little money, it was a lot of money. They may not figure out exactly how much, but they knew it was going to be a lot. And we knew before it happened, there was going to be a run on the bank. Confidence had been shattered, right? At the same time this is happening, we had a very, very large loan. I think it was $200 billion with a very old alliance, and they basically told us to pound sand, and they weren't going to pay. And it was the leader of the alliance at the time. He made some bad calls. They were in a bad way. They were willing to take the hit to their credibility, and basically renege on their debts. And
we should just get this out of the way. It was not the Matani, correct?
it was no. I don't think he was. I'll avoid talking about that. We actually tried to negotiate, and we said, you know what? We'll give you debt forgiveness. You pay us 70% of what you owe us, and we'll call the debts cleared and settled, right? And we continued to work to negotiate, because something is better than nothing, right? So even if we had gotten 50% of what they owed us, that was better than getting 100% of nothing. And so we negotiated. We failed. We ended up getting absolutely nothing. So we have two, and we didn't think that was going to be public. So we weren't too concerned about that becoming public, but we knew Rick Dick was going to be public, right? Eventually they would find out that he was banned, and people would understandably be concerned and panic. And we knew that would lead to a run on the bank, because there's no insurance on the bank, right? This is all stuff we talked about. So what did we do? We liquidated all of our assets. All the orders were canceled. All the materials and commodities we had stockpiled were sold. We liquidated the BPOs that we had used for market manipulation. We did everything we could to get as heavy on cash as we could. We had about a week before it became public. And so for a week, we basically tried to not talk about it. We tried to tell people that knew about it not to say anything. We said, look, we're not telling you, you can't tell people, but don't tell them for a week, because if we're not prepared for this, it will kill us. So we spent about a week preparing, maybe a week and a couple days. We liquidated everything that we could in that time. And that's when the news became public, and people realized that eBank was in trouble. And the withdrawals started. And for about a week, we saw prolific withdrawals, amounts and volumes that we had never seen before in the history of the operation. At that point, the bank had been operating for 2 years. And we serviced every single one of them within 24 hours.
But by your calculations at the time when you liquidated, how close to solvency were you, or how far into insolvency were you?
We had out we had about 2.2 trillion in total assets, illiquid and liquid assets, right? And I think we ended up having, I think we were able to get about 1 trillion, 1.1 trillion in cash. Some of that stuff was stolen. The stuff that we couldn't convert to cash was either stolen or it was illiquid and we just couldn't sell it, or we decided not to sell it, right? Some things
because if you had stuff out there in loans, it's pretty hard to call those loans in.
Exactly. And we couldn't, right? Because if we did, people would ask questions like, well, why? Right? And we couldn't afford that. And so for those loans, things out on loans, things that were liquid assets, we didn't want to sell, chose not to sell. And then stuff that was stolen, we couldn't, obviously get cash. But we had something, it was about a trillion point one or something like that. So the withdrawals started. And at this point, the strategy was very, very simple. We service the withdrawals as quickly as humanly possible. And we do that for all of them. And the idea is that we demonstrate to our customers that we're healthy, because why would be with servicing withdrawals as quickly as possible if we weren't? If we were weak, we wouldn't do that, right? We'd make up excuses or something. So the strategy, the idea at the time, and I wouldn't take any there. For the most part, we ran it as a democracy. I encouraged the directors to be political and act politically. But when this happened, I said, guys, I'm sorry. It's a dictatorship now. And I leveraged all the influence and all the power I had with that group. And I said, this is the way it's going to be. I'm happy to say that only happened that one time because it violated one of the principles of the bank. So we go full throttle, right? We're pouring money out and we're watching it drain, and we know we only have so much. And the problem is if we can't get confidence, if we can't win confidence back before we run out of money, we're screwed, right? It's over.
Well, I mean, let's compare, and I don't want to compare this to Madoff from the standpoint of it being a Ponzi scheme or anything like that, right? Yeah. But more in how after the fact, after it had come out, what had happened there, you had people who had withdrawn their funds and been paid in full and were totally, well, paid in full. And then you had the other people who didn't, right? They were the ones left holding the bag. And what the regulators did afterwards was go back and say, well, wait a second, you got paid your money you never should have. Give that back. Now we're going to find a way of dispersing, out to people equally. Yeah.
So I should mention, and this is not in trying to avoid that question.
I mean, because it seems like what you were trying to do was you were trying to maintain confidence, right? But in the end, those who didn't ask for it didn't get it.
Correct. That's eventually what ended up happening. Eventually, the bank became illiquid, and people actually did lose money. Now, that said, and I should point out that my involvement with the bank ceased. The directors voted me out. So sometime after we recovered from the run, and we actually were able to survive the run. We won back confidence. People began depositing again. Our cash levels went back up. We almost got back up to, I think it was 900 billion or something, which is incredible, by the way. We were down to, I think it was at one point, 70 billion was all we had left towards the end. And you think about
I remember something that you didn't actually touch upon yet, because you mentioned that the structure of the bank. You were talking about actually taking it public and converting stuff to shares and stuff. I recall this, and I was a huge proponent, and I was actually hoping that you would do that, because I would be throwing all my money in there, because your model was working, except for the problem with the RMT, and what then killed a lot of your name and created a lot of fear. But the model worked, and it was a really good model, and if you had gone public, I believe you would actually still be around today, maybe even bigger than back then.
Maybe. It's hard to speculate. That was a long time ago. So for everyone watching, if they're not familiar, and they probably aren't, because I don't think, well, I'm sure there's some people back from back then. So once we survived the run on the bank, we still had a problem. We had a big hole in our balance sheet, right? All the money that we had lost in the loan that had defaulted, because we officially recognized it as defaulted, all the money that Rick Dick had stolen, that was a huge hole, and our margins were not high. We had very small margins. It's difficult to get high margins on huge sums of capital, especially at that time. And so the question became, well, how do we recapitalize? We need to recapitalize. If we don't recapitalize to fully cover what we owe people, then what do you call that? Is that a zombie bank? What? Because we're not fully healthy. And so that was a big problem. And so the solution that I proposed to that problem, I called it the nuclear option. And I said, basically, we'll do an IPO. We will take the risk away from the customer, and we will put the risk on the investor. That was the entire idea. So what we would do is we'd launch an IPO. We would sell shares such that we could recapitalize and have a little bit more breathing room than that, replacing the money that was lost through the default and through the theft, so that the bank could become 100% and more than 100% functioning from a cash perspective, right? We'd have all the the cash, the liquid and illiquid assets to cover what we owe people. And at the same time, we would introduce even more democracy into the running of the bank. By way of, all of a sudden now we have investors and we need to operate the bank according to their wishes. Because I don't know if you remember this, Caleb, I was pretty authoritarian when it came to people challenging the bank.
Yeah, what I remember most was that the whole thing happened when BSAC, and I had this in my notes that we were going to talk about the virtualized shares. It didn't really have a lot of good shares and investment opportunities. So there was not a lot of activity, right? And this big entity that was in trouble, if that had been launched in a proper democratized IPO, right, where you could go in, you could bid, you could be a voting party on how much of the profit are going to be paid out as dividends, all these things, right? It was just, I was sitting there waiting for you to say, we have to do this, and we're doing it, and I don't care what anyone says. And it never happened. So, and I think it was sad because I know that there was a lot of people that loved the bank idea just from a meta story perspective. And personally, I wouldn't have cared about losing money. I would have invested no matter what. Because it's fun. It was so much fun. It was such good stories.
You feel like you're creating something. I mean, this is something, again, you get into the whole player-driven narrative of EVE Online, right? And this is something truly created purely from the players.
Yeah.
Exactly like when the war now is being financed just for the hell of it, right? This is something that I would have been putting money in just for the hell of it. And I'm pretty sure that a lot of the big cash holders on an individual level would have felt the same way, especially in the MD.
Yeah. What's really interesting about the current war is when you think about it, it really is war financed by corporations, right? I mean, this is not some kind of sovereign nation conflict, right?
And I would like you to maybe make a little bit of commentary on the way that it's been financed, at least on one side, because it's been financed by casinos, and maybe you could touch a little bit about the difference between casinos and banks.
So much stuff we can cover here.
Well, because I was going to ask him a very basic question that was going to lead into this, and that was, having given all the thought and work and effort that you put into creating kind of a banking system, within EVE at the time, right? And what happened with that? Don't you wish you had just created a casino?
Well, when you think about it, my original plan was to introduce a system, right? Is to introduce ideas and concepts and then allow people to build from them. With the bank, I wanted to demonstrate that it could be done, and it could be done well. And I wanted to show people how, and we did. And after eBank fell, and after eBank collapsed, it was not the last banking service to be created. And in fact, now it's a fairly normal thing. Deposits, withdrawals, balances. How many EVE services use this idea today?
Yeah, but they still don't have we still don't have a proper financial product service. We have a lot of people doing this internally and between themselves and these things, but we don't have a public one. We don't have a public stock market. We don't have any of the things that you were leading up to introducing. Actually, I would say that it's the opposite. The MD have died since you left, and it's been in a slump ever since. Right?
Saying I murdered the MD?
You killed the MD.
From a product perspective, actually it did. It went into a really hard slump, and the scams have just been stacking on. So no one is actually serious about what they're introducing. They're basically just doing the whole rep grinding and then scaling up their bonds and basically doing Ponzi scheme upon Ponzi scheme. And no one is interested in doing the things that you did. And this ties back to the whole thing about effort and brand value, right? You had brand value. You had the right people. You had the right invested time in the back end, in the coding, and all these things. So this is not seen much anymore, right? The closest thing that I've seen recently is that weird copy one that basically took one of the UK financial things, one of those loan shark sites, and then just copy pasted everything into their own backend, right? Even the wording is the same.
Yeah. Yeah, I mean, what's really interesting about how it all started was when we started eBank and we opened that up. eBank grew to 2.2 trillion. What's really interesting about this is at the time, you go back to that point in time, that was an enormous amount of money, enormous. Now, maybe not so much. Money supply is inflated, and inflation itself has crept
Uh-oh,
into
don't go into inflation.
but well, I won't, because we can't accurately measure velocity, and money supply is still difficult to understand. So inflation and price baskets are it's not. Maybe one day we'll get the clarity. I just don't think we have the tools today to be able to really talk about inflation in a rational way. But anyway, at that point in time, back when eBank was first formed, 2.2 trillion was in a huge amount of money, especially for a financial organization. In fact, it was, I think, the largest at the time. Nothing had ever been that big. I had never, ever asked for public money before eBank, not once. I was a successful trader, but I wasn't that successful. There were tons of people that were way more successful than me. And at the same time, I had huge amounts of trust and influence in the community. And the reason why, I think, is because I wrote a lot. I was very clear about, I had these ideas. This is why I think it'll work. And I tried to explain things properly. I introduced terms and language so that people could have good discussions about these topics. I contributed. I added to the discussion, and I helped it move forward. That's what MD needs. It needs people that can move the discussion forward, that can lead the thinking, that can help people talk about these things and construct systems and products and so forth. But eBank was wildly successful, and really we just had we had a guy. The CEO was a member of a colossal failure of a bank, right? I mean, we actually had the deck stacked against us, and we still did amazingly well. And I think that in large part is attributed to how well we communicated what we were doing and why it was a good idea.
I have two questions I would like to ask before we start closing it up, because I know that you have to go and do stuff in real life.
Supposedly.
What tools?
It's got to go manipulate a currency market.
Try to simplify. What would be the minimal types of tools that you would need from CCP feature-wise, without getting the extreme complexity that could be in a far future, but the simplest one that you would suggest that they implement? And secondly, what would make you come back to Eve?
Okay, let's tackle the CCP question first, because that's easier. So two things. One of them is to adjust the journal features. So I mentioned this earlier about the transformation between the API journal entries and accounting entries, right? It's very important that they translate well, because if they don't, it requires manual intervention. I mentioned earlier, the easier something is to do, the more likely it is to be done. If you have a business that requires constant daily manual adjustments to accounting entries to ensure good accounting, is it going to happen?
Would you be willing to drop by forums or Slack and write a few of your thoughts on that and base them on the current state of the game?
So I wrote this article years ago. It's I'll point you to it. Sens and I did a lot of work on this back when we were working on Eve Insurance, which nobody used except for one person. It's horribly depressing, but it's an entirely different topic.
Well, it's not that. She's in the actual chat right now, so not that depressing.
Well, it wasn't adopted for just the reasons we discussed. It was too complicated, in my belief. It was too complicated, and people didn't see the real value in it. And honestly, if there is no real value, you shouldn't be selling anything. But the accounting is really, really critical. You've got to have good accounting. To have good accounting, you've got to be able to translate what happens in your wallet into good accounting entries. And unfortunately, there's some ambiguity where it's not really clear what's happening when you look at the wallet entries. Now, if you're a human being, you could probably figure it out and make some guesses, right? But a computer needs good hard rules that are going to work all the time, every time. And until the things that are happening in the wallet journal, with research, with manufacturing, with marketing or margin orders and so forth, until all that can be easily translated into good, proper accounting entries, we're not going to have good, usable accounting software. And we need that in order to be able to do proper IPOs, in my opinion. And that's also one of the reasons why the IPO with eBank wouldn't have worked. We didn't have
this brings on a small thing, because now we have citadels, and I would really like to get that idea of insurance back into the game, because I wouldn't mind being able to insure my citadel before I actually start using it. And this brings on the whole thing of citadels might actually bring in a real estate market in a more proper way. So there's a lot of the stuff or the mindset that you introduced that might actually start working now.
You would need to actually create a system and a product, right? And you could do it. You could say, I'll insure citadels. By the way, and I don't know off the top of my head, maybe you guys do. Do citadels have any insurance at all?
No, nothing.
No default payout?
No, nothing. It's all lost.
That makes everything easier. So the problem with citadels is that they're inherently high risk. I don't know how many been blown up, but a bunch have. How do you actually assess the risk of citadels without historical information?
Yeah, but that is available, right? It's becoming available every day. How much is traded? How much is potentially up and in use? And currently, how much is destroyed?
Which systems are high-risk systems, right? Strategic systems are going to be higher-risk systems. Actually coming up with statistical probabilities and statistical risk when it comes to the actual safety of the citadel is absolutely key to pricing policies.
And that's the whole actuary calculations and stuff like that. And that's maybe something that we should get you back talking about, because I know that was the big dream for you. So
I worked for one of the largest insurance companies in the world for about 5 years. I left them about 6 months ago to join a startup. And I actually talked to them about insurance with no actuarial data. And I had some interesting conversations with actuaries. It's actually something I've thought about, not just in Eve, but
words that have never been said before.
Yes.
Interesting conversation with actuaries.
Yes. And actually talk to them. You have to speak slowly and occasionally give them numbers, and it keeps them, dated. It's funny. I seem to be attracted to stuff that's incredibly boring. So the more boring something is, the more fascinating I think it is. But yeah, I mean, getting the actuarial data, having some basis for making pricing decisions on, how you price policies, having an underwriter, because remember, your premium is a very, very small fraction of your overall policy, which constitutes the liability of the company that writes the policy, right? And so you need some kind of underwriter or collection of underwriters who could underwrite the overall total amount of money that you'd be insuring. And you've got to have some confidence that you're not going to pay out all those claims.
Well, I would think that the path to Citadel insurance would be easier, not in terms of a traditional insurer, but more in terms of a mob protection racket.
It could end up being that.
Pandemic Legion will protect you. You will insure your Citadel because it will back it up with brute force.
And remember, because and this is one of the great things about citadels. Citadels are not built by individuals, right? One single player does not necessarily own a citadel. Corporations own citadels. Alliances own citadels. I would say alliances probably own citadels, right? I would only want, if I was, let's pretend for a moment, let's play make-believe. I'm an insurance company. I insure citadels. I would only want to insure citadels created by alliances. And I would probably put in requirements that your alliance has to be so old and have so many members, right? And what I would say is, look, I'll insure your Citadel, but look, if this thing blows up, the next policy I write for you is going to be a little bit more expensive because you've demonstrated that you can't adequately defend your assets.
And that's a whole different type of actuary calculations, right? Because that's
Right.
based on war and not normal crime and
A
stuff
great,
like that.
a great comparison is if I back into a mailbox with my car, right, and I report it to my insurance company, what happens to my rate?
Yeah, it goes up. But the point I'm making is that usually actuaries do not look at war statistics. Usually they look at crime statistics. But
Well,
you would need
Well,
to
they
look
do
at.
if you're building a house in, I don't know,
well,
Aleppo.
simplify.
You think any insurance companies are going to insure that?
Simplify. Take away the war. Take away that qualifier. Statistics, right? They're going to look at the numbers. War or whatever. There's some threat of loss, right? It could be war. It could be backing into a mailbox if it's car insurance. It could be me, having a heart attack if it's life insurance, right? It could be me getting injured if it's health insurance. There are some threats that could induce a possibility of loss on the part of the insurer, which is I have to pay something, right? Eve is special because it happens to be war, but it's not so special because we can observe many times where insurance is made and there's other threat factors involved, and people have figured out the math and they figured out the pricing. How do you price for hurricane insurance?
Yeah, I mean, did you build your Citadel in the 100-year floodplain?
Right, exactly. If it's a region which is prone to violent conflict and heavy losses, historically speaking, which can be mined by killboard information, then, well, hell, man, it's going to be a pricey premium, right? And you're still going to come out okay. You're still going to have something for the money that you spend. But, it's not going to be some sweetheart deal where, your policy premium is like 5% of the value of the payout. That's not going to happen, right?
The last thing I'd like to touch upon is that the thing that you were making with insurance was basically based on ship hulls and stuff like that. But I would like to, in a very near future, especially if you might consider coming back, being able to insure my return of investment on my assets that are in citadels and end up in asset safety, because then I'm going to lose the 5 days, right, before I can actually get them out. And I would like to get a better product when it comes to insuring my courier contracts, so I might actually, with trusted parties, reduce collateral to improve the speed of logistics. And of course, last, when I built my Hexxx Large or my Palatine, I would really like to be able to talk a policy with you.
Yeah. So the problem with that is it's a great idea. There is real value in that idea. But the big problem is it's too complicated. It just is. Some people might not think so, but enough would probably think so, and it wouldn't take off. And that's the unfortunate thing. There are some really great ideas that could absolutely work in Eve, but how do you educate people on how to take advantage of them, right? And that's what we always, historically, MD has never been able to get anyone to get interested in futures contracts and options contracts because they're too damn hard, right? It's not that they aren't useful. They are, but nobody can understand them.
So, but basically what you're saying is that we need to do some sort of proactive recruitment of new Eve players, basically Dirk and similar. We will go to the stock exchanges and the business schools in real life and start actually getting them to play Eve. And so we can get
it's not that they don't play Eve, but again, all of these things always come back to counterparty risk and risk mitigation, and ultimately back to that word trust, which is one of the most unused words in Eve Online.
It's funny, actually, it used to be the biggest. You look at the old MD conversation threads from years ago, and trust was always talked about. It was the biggest thing to talk about. It was the only thing to talk about, right? You had to trust people. And so we talked about, well, how do you trust people? What are the things that help people build trust with us? That's where all the IPO template stuff came from. That's where, all the accounting and the auditing and third-party stuff came from. It all came from trust. So And by the way, I don't know if you noticed, I successfully avoided your questions. Um, let me loop back real quick because I want to make sure I address them. I mentioned the whole thing about CCP. What does CCP need to do? CCP needs to create entries that can translate to accounting entries in a simple way. They also need to introduce, and this is the really awful part that nobody is going to like. I don't think anyone likes this part, but you've got to automate the transfer of money. You do.
Player
The
billing.
withdrawals.
Player
Yeah.
and alliance and corp-based billings that can be acknowledged or ignored and create consequences depending on whether or not they're acknowledged.
And you could do it in such a way so that it wasn't individuals, it was corporations or alliances, but it needs to happen because without that, it's not scalable. It comes back to this question of scalability. And as for what it would take to get me back in Eve, I don't know. I'd have to win the lottery or something. So in real life,
like an Eve lottery or a real life lottery?
no, real life lottery. So I won't talk about it a lot, but I'll talk about it a little. So I've got a son. He's 9. He's great. I like to try to spend time with him. I'm also a big rock climber, so I spend like 9 hours or something in the gym every week, and I work more than 40 hours a week on my job. So I mean, I barely have time to keep up on the games that I really truly enjoy these days, like Kerbal Space Program and some of the others. Yeah, I mean, I haven't even played any video games in the last week or so, which actually is depressing when I think about it. But I'm at a place in my life now where I've got just too much going on to do it. I still follow it. I still love it. I still love talking about it because these ideas, they're great ideas, and I think they can work in the game. And I think the game just needs to keep advancing and keep growing, which it has slowly. But communication and education efforts need to be made. We talked a little bit about what does it take for people to get it and to understand it and to run with it. It's education. We could go to the business schools and we could get the business school kids to become EVE players, or we can go to the EVE players and say, look, I'm going to give you a very simple understanding of finance. I'm going to give you a very simple understanding of what stocks are and how to actually create an IPO and what bonds are. You do that and you're making progress. You're moving the community forward, right? If we can educate the MD community, as a community, as a group of people, we're far more powerful as a group than we are as any individual, right?
I think
And that's what I've always tried to do.
I think we should end on that. That's a perfect ending. So to anyone watching, I'd like to say thanks for following this, and to anyone watching later, if you have any questions, please post them in the MD and I will poke Hexxx and see if he can't go and give you a reply.
I will come. I will accept any invite that I can accept to have future conversations. I love talking about this stuff. So
great. Next time we will talk about insurance in detail. And if anyone falls asleep, I will make sure that I have an alarm bell going.
I'm wearing a shirt and tie for the next one of these because it just feels wrong. It feels too modern being here in a t-shirt, like it's casual Friday or something.
You've got an amazing backdrop, by the way.
Yeah, you win on that.
I at least felt I had to go with something like that, right?
Yeah.
Thanks for coming and helping with this, Dirk, and I hope you will join us next time too. So, without further ado, goodbye and thanks.